So first, let's just talk about um, what programs that OFCC offers. Our flagship program, of course, is CFAP, the Classroom Facilities Assistance Program, which was the initial program when OFCC started way back in the late 90s. But we also have other programs, and some of these are actually inactive. So ENP, Exceptional Needs Program, is a program that came out a few years later and is designed for districts that um, have a particular building that might be in really bad condition, especially in terms of safety. Also, there is a sort of another prong to ENP for districts that have exceptional student enrollment growth. That program, however, has been suspended since around 2018, mainly because of demand. We excessive demand actually on our list of districts, so we've sort of held that off, and there is discussion about potentially bringing that back. But I think the key thing on the ENP program is it's by application only. So when that if and when that reopens, that there'll be information that goes out on how to apply for that. We also have vocational schools, which, as everyone knows, the governor's office has been uh, making a high priority for career tech facilities. There is a separate list that we go through for those, and we try to fund at least one vocational school every year. And then the urban initiative, which really began back around 2001, is still ongoing, and it began earlier because we knew that these were large projects that had to be broken into segments over time. Columbus is still desiring to do another portion, and Cleveland still has one additional segment to do. We have STEM schools. Those are also by application, and we would fund one per year if there are applications in. And then the other program, which is not well known, is the Alternative Facility Assistance Program, or AFAP. And that program was really designed for districts with higher wealth that weren't particularly interested in doing a full master plan with us. And we created that so that they could do that. They could do parts and pieces of a master plan. However, the way it's set up right now is that you're not eligible for AFAP until you're eligible for CFAP. And I'm going to talk about the eligibility here in a little bit. You can go to the next slide. So, regarding CFAP, the way co-funding works, most people know that uh, the co-funding on CFAP projects is based on the equity rank, which the Department of Ed puts out every year. And I always like to give the best example to understand the way that works. That is that if you're like number 304 on the list, and there's about 600, I think there's about 608 districts right now. So you're halfway up the list. So if you take 304 and you divide it by 608, that's 50%, which basically means that the split between the state share and the local share is 50-50. And the district share then would be 50%. So as we move up the list into higher numbers, the state share goes down, and the local share goes up. Because when we first started on the program, it was the most that was given by the state was 95%, um, and the least we'll give is 5%. So, and I'll talk a little bit more about the equity list later. But the other point I wanted to make here is the co-funding share is also affected by the master plan that the district ends up with, which the only way you know that is to go through the planning process and be able to see the results of what the planning is from School Facilities Commission, or for OFCC in terms of what the plan actually is going to support because of the various policies and rules that we have. And I'm going to talk about how that affects your share. The other thing, of course, is we do allow segmenting. That is something that was not originally done when we first started. Segmenting came out, I think, around 2006, because when we first started um, this program, it was an all or nothing. So we came out to districts and um, we said, if you want to do this, you have to participate in all of the entire master plan. Um, Now with segmenting, districts can choose to just do part of the plan, which allows them to tailor the project and make it smaller and more affordable to their communities. Because when we were first doing this, there were a lot of communities that said, "Hey, we love the plan, we love the deal, but we just can't afford to take that big of a project to our community. So, is there any way we could just do, building X, the high school or something?" And this allows that to happen. Go ahead, next slide, please. So let's talk about the equity list because this is probably one of the hottest subjects and certainly one of the questions that I get asked the most, which has to do not only with the funding amount, but also the timing, because the equity list not only determines um, the state local share, it also determines the order of which districts are being funded. And of course, we only get so much money every year, which has been, as most of you know, about 600 million per biennium, which then comes out to about 300 million per year. Out of that 300 million, we have to fund districts that are already in the pipeline, as well as try to fund new districts that are coming into the planning. So the equity list at the beginning was pretty easy to understand in terms of the timing, because districts that were originally offered funding, were getting 95%, 90%. So it's pretty easy to uh, convince a district to take a deal when the state is going to pay that high percentage. So what that essentially meant was that we would make an offer to a district, and they said, yes, we want to do this. They would present it to their community in the form of a bond issue, and it would pass. And then we'd move on to the next district, and we would just work our way on up the list. And you can go to the next slide too, Jen. So as we were working our way up the list, um, things over time changed. As we all know, the economy ebbs and flows. Back in 2008-ish, there were challenges. And then, of course, we also got a influx of money from the tobacco settlement, which I think, if I remember right, it was about 1.1 billion. That had an effect as well. Obviously, we were able to sort of supercharge our funding back then and be able to fund a lot of districts. But the point I'm trying to make here is that over time, things became complicated because districts were no longer able to necessarily pass their bond issue, nor was the timing necessarily well for them. So, in other words, if we said to a district, we are ready to fund you, are you interested? They say yes, except the timing's bad because we've got to deal with an operating levy. So, can you maybe talk to us next year? So these different situations required us to begin to think about this order of funding in a different way. And so what we ended up doing is we ended up creating these sort of categories, or you can almost think of them as buckets, where we would um, put districts that are in that category together, and then they would be ordered in that category. So, for example, the term lapsed simply means a district that has been offered funding and was unable to come up with their funding um, during the time that they were allowed, which has been up to now 13 months, which it's going to change, by the way, to 16 months. But So a typical CFAP district gets an offer, say, they get an offer in July, they go to the ballot in November. They could go to the ballot the following spring and be within that 13 months. And if they fail, or decide not to go back again on the second attempt, then they would lapse out. So that's a category that we put districts. Every district that lapses out is in a category. I mentioned earlier that we have segmented districts. Segmented districts are ones that did a partial master plan, say they built their new high school, but now they want to come back in the future and do another building or finish their master plan. So we had to figure out going to categorize them in terms of how do they fit into this order. We also have districts I mentioned that said, timing's not right. We're interested and we're not right. We call those deferred districts. So in other words, we were ready to fund them, but they were not ready. So we put them in a category. So if you go to our website, we do have a little category or a little white paper in there that sort of describes what I'm saying here in terms of these various categories. And then, of course, I mentioned, we have STEM schools, we have the vocational schools, we have the urban initiative. And so we had to create this priority of funding to try to make sense of this. And so actually the way it works now is that the first category of the highest priority is the lapse segments. And so we would go to those districts first. Every year if there are districts that are in that category, because we don't know who's going to be there and who isn't until they actually lapse out. And then they have to tell us that they would like to go back to the ballot. And then we would fund them first. Same thing with segmented districts. They have to tell us, hey, we're ready to do a second segment. So those two categories get funding first, and then we can go into the deferred, which are districts that are interested and have told us that, and they are sitting down below in this other category. So, I know this is hard to understand, and this is a reason why we have difficulty trying to be able to explain to districts exactly when they're going to get funding. You can go to the next slide, Jen. So, the bottom line here is it's very complex. There's a lot of variables in terms of being able to predict timing. We can tell you what category you're in. We can tell you who else is in that category, and we can tell you, who's in front of you. And if you're not in any of those categories, that means we haven't gotten to you yet with the outreach process. And I didn't really talk a lot about the outreach, but over time, what we had to do is we literally had to formally be reaching out in writing to districts, asking them if they're interested. And if they are, they would respond with a board resolution and they would get added to that list. And that is that priority of funding list, that third category that I showed you. And if you responded to that, you got in that list. If you did not respond or told us you weren't ready, which is the deferred category, you're not on that list. So the districts that are not on any of our lists are way out there. Right now, we have about 50 districts on that priority of funding list. That does not count lapsed districts and deferred districts. And so that means you're out probably at least 5 years. I tell districts you're probably out somewhere between 5 and 10 years. And I'm sure folks have a lot of questions about this, but I need to keep things moving here. So let's go to the next slide, please. So I want to talk a little bit about the planning process itself. All of our projects have two main data points. One is the assessments. The other one is enrollment projections. So we need to, whenever we start working with the district, the first things we do is we assess the buildings, we do enrollment projections. The main goal of this is to create a master facilities program, which our master plan, which is for most people, master plan can mean a lot of different things, but for us, what it means is it determines what your total number of buildings are going to be, what the disposition of those buildings are going to be, and what grade level configuration are going to be in those buildings. And then that will determine then the scope and the budget, which is what everyone is obviously trying to understand. So move to the next slide, please. So I mentioned that the assessment enrollment projections are the basis, but I want to talk just a little bit about some of our standard planning guidelines. Probably the most well-known is the 2/3 guideline, which is been misunderstood for years. And I understand why, because when it started off, it really was a rule. And basically what that says is if your assessment that we do says that your building, the cost to renovate it exceeds 2/3 or 67% of the cost to rebuild that same amount of square footage, then the state is basically saying that building should be replaced. It basically now is a guideline. It basically says if that happens, that building is eligible to be a new building. It's not usually quite that simple because we usually are consolidating buildings and that building may not be replaced one for one. The easiest way to understand that is if we assess the building and the cost to renovate it is 8 million, the cost to replace it is 10. 8 divided by 10 is 80%. So the 2/3 rule has been exceeded because it's 80% and 67% is the threshold. Now, we also have another guideline which is not as well known, and that was because we started running into buildings that are newer, and we're going in and we're still doing assessments. And if that building then is newer and it's basically 33 or under a third, then basically what that allows the district to do is sort of pick and choose from the assessment the parts and pieces they would like to do, and they would not have to do a full renovation. For example, if we went out and we did your building and it was at 30%, you may want to say, hey, the state says part of the assessment is new technology, we want to do that. So that is something that's not as well known, and we don't really run into that a lot, but it is there. Another thing which is actually in law is the 350 rule, which is basically says the state will not co-fund a building that only houses 350 or less than 350 students. The other thing that we have found from building all our buildings, that small buildings like this are usually not a good idea because they're very they're expensive in terms of cost per square foot. It's much more economical to build a larger building. However, we understand that there are times where a 350 or 400 student building is really what needs to happen. Quickly, also, we do reprogramming. Best way to understand that is our assessments are only looking at infrastructure, which is, the plumbing, the heating, the windows, the roof. It's not really looking at the sort of organization of the building, which obviously is important. So reprogramming is a step that we take if a district wants to renovate a building. The state will consider moving around of walls, which another way to look at it is just consider it to be reconfiguration. We will co-fund reconfiguration of walls if what is being proposed fits into the overall plan. Another thing which is relatively new is base plan. Base plan, think of it this way: the state is not going to co-fund any plan. So if a district wants to build a whole bunch of really small buildings, the state's going to say, no, it's not efficient. You can do it, but what we're going to do is we're going to limit our co-funding based on a base plan, which is the plan that the state feels is a reasonable plan of consolidating. So, and the most common example of that is if you have a small district, which there are a lot in the state of Ohio. Let's say you have 1,500 students, and your buildings all qualify for replacement. Let's say you have 3 buildings and 1,500 students. The state is going to create a base plan for a new PK-12, and that is going to determine the limit. So if the district wants to do a two-building plan, let's say they want to do a middle high school and a new elementary, that's fine. But the difference in the cost between those plans would not be co-funded. It would be considered a locally funded initiative. So if there's more questions on that, I'm happy to answer them, but let's keep moving here. So the design manual, everyone's familiar with the design manual. The design manual came out in order to ensure that all buildings are receiving the same quality that goes into them, including the amenity, as well as things like square foot per student, and the budgets are the same, dollars per square foot. And it was basically to create the equity across the state. It's updated every year, and in fact, this year is almost a complete overhaul. If you want to know more about that, we've been doing road shows. We have one this Friday in North Ridgeville at Jen. Maybe you could put it out in the chat on a little bit about that, as well as another. I think we have a virtual one coming up also on the following Monday. Next slide, please. So a little bit about costs. This is, as we all know, inflation has drove everyone nuts. Since 2019, I believe, from 2019 to 2023, the average cost per square foot has gone up about 42%. And we were having a rough time, just like everyone else, trying to catch up with that. So as you know, we create these budgets well before these projects go out to bid. So we are constantly trying to forecast, and obviously no one was able to do that. But I just thought you'd be interested in, and these actually are the 2023 to 2024 is now out, and it's up about $20 a square foot more than that. So it's probably closer to about 370. We have broken the $400 per square foot barrier, which I never thought would happen in my professional career on some of the smaller buildings. And you can go to the manual and you can see this because it varies on the size of the building. So smaller buildings are going to cost more, bigger buildings cost less per square foot. This is sort of a median halfway between it. The other thing to note is we do have various cost regions. The state, we have found that labor rates and material availability is different across the state. Mostly labor varies, and so Columbus is sort of the baseline. So that varies depending on where you are at. Next slide, please. Now, a little bit about the alternative, because I know because of the waiting list for districts trying to get CFAP funding, a lot of districts are exploring. Then they ask us, if we have to wait another 6 years, what can we do? The ELP program, the Expedited Local Partnership Program, was created for that. And again, the easiest way to understand this, the program works the same as CFAP in terms of planning. You're going to go through the exact same process. We're going to do assessments. We're going to do enrollment projections. We are going to come up with an overall plan, and then the district can proceed with any portion of that plan they want. The difference here, of course, is the state's not ready to fund. So if the district believes that they can get support from their community, or they have alternatives to ways to fund, then they can move forward with their own money, with the idea that when the state is able to fund them on the list, when their time is up, the state will essentially refund them the share that the state share. So you're basically earning that credit as an IOU from the state. And this program has really we have all the statistics on how many people are in this, and there's a lot of districts that have participated, have reached CFAP, have got their share. Most of them use that share to leverage additional work to either finish their master plan or to do an additional portion. Next slide, please. So in terms of eligibility, districts that are more than two years away, obviously the reason for that is because if you're that close to CFAP, it doesn't really make sense. You can just wait. But if a district finds out that they are, then they can go through that process. I think I've already covered this, so we can move on to the next slide. So a little bit about bond counsel. I get asked this a lot. Um, when you're working with us during planning, we always recommend that you bring bond counsel on. You don't have to bring them on right away, but bring them on once we're starting to get a feel for where the master plan is going. And this would be true if you're, in a funded program like CFAP, or whether you're an ELP. And the obvious things that they're going to help you do is, if you're trying to build a new high school, for example, what would the millage be? Those are obvious things. But the real point that I wanted to bring here is, a lot of times districts are up against the 9% debt limitation. And so if you're in our program, if you're in CFAP, or even if you're in the ELP program, you can get exemption to exceed that. And that's what this ORC 133.06 is. If you take a look at that on B and E, and you work with your bond counsel, you'll see that would allow you. And so there's certain paperwork that has to happen. It basically is contingent on the controlling board approving your ELP project. So for ELP, what we do is, at the time we approve you, we actually create the ELP agreement. And then that ELP agreement is approved by your board, it's approved by the commission, and then it's approved by the controlling board. Once the controlling board approves that, that's sort of the green light that means that you are participating in the OFCC, and that essentially allows you then to get that debt limitation exemption. Obviously, you can always reduce the scope. You can work with them to sort of get the scope to fit what your ability to borrow is. And then there's the special needs exemption, which is based on your projected growth in your taxable income. And they can run those numbers for you. But if you don't meet the special needs, and you can't get the scope to fit, and you really need to go beyond that to borrow, then the ORC 13306 B and E is really a great thing. And then also, you're going to have locally funded initiatives. Those are things that are outside our program, and there's a proportion to that you have to work with. So you can't exceed certain limits, and that will help you with that to determine how that works. And then finally, there are other options besides going to for a bond issue. We have a lot of districts, and I've probably got at least a dozen districts that I work with, where they're doing certificates of participation, borrowing against pipeline revenue, or perhaps a power plant built in their district, or borrowing against the PI. I've seen all kinds of creative things. And so they can work with you. It's not unusual also for these things to be combined with a bond. So I've seen them where a bond issue is combined with a certificates of participation. That's more common than you might think. And again, the bond counsel can help you with that. And I think I have one more slide, Jen. So a few things on, sort of what happens once you do have your funding. I mentioned the 13-month limit from the time it is approved. So on CFAP, that's from the time the controlling board approves it, which is generally in August for CFAP districts. In ELP, you can take projects anytime. So it's really based on the timing of the district. But for the CFAP projects, once you have your project, once you've passed. So for districts that are on the ballot on November 7th, if they pass, one of the very first things we do, as soon as we know, Janice Parker from our office is going to send out what we call a project agreement funding checklist, which is basically the information that we need from the district to begin assembling the actual project agreement. Things like, proof, Board of Elections, proof of the bond, or the bond issue passing, there's a whole series of things, and you would be working with your bond counsel. We actually send that out at the same time so they get that information and they can work with you as a treasurer to pull that information together. At the same time we're doing that, we're starting to draft the actual project agreement, but the project agreement will not be fully executed until you have your local share deposited in the account. So once that happens, then usually our executive director is the last one to sign that agreement. So what'll happen is we'll get your information, we'll put together the project agreement. It will come to the district via DocuSign, um, but it won't be finally signed by our executive director until we have proof that the money has been deposited. And once that happens, then that's sort of the green light for our project managers to begin working with you on your consultants, so procurement of your architects and CMs and so on. If it's an ELP project, it's a little bit different because, as I said, we would actually do the project agreement at the very beginning, and it would go to the commission and it would go to the controlling board. So once you have your money, you already have your agreement, you have the green light, and you can move forward. The other thing to note is that on the CFAP projects, the funded projects, the procurement of architects and CMs is done. We lead that process. It's done together. However, in ELP, you can do that all on your own, and we do not participate in the selection of those. And then one final point is, if for any reason, as you're moving along, once we have a project agreement, if that scope is changed, for example, if you have an easy example, if there's a building on your plan that's supposed to go away and the state's going to co-fund abatement and demolition, and you sell that building or you decide to keep it, then we would change the scope by removing that. We would do an amendment, and we have a formal process to remove that from the project, and then those funds, the state funds, would be released back to us, and your funds would go back. Now, normally those funds are actually kept in until the end of the project because we don't know how it's going to play out. So there's a lot I can talk about here. So this is a sort of my quick version of how we do the planning up front on our projects, and I think that should do it.
All right, but we do have a couple of questions in the chat. I do just want to remind everyone, if you have any questions, please drop them in here. And if you think of anything after the session has ended, please feel free to still send them in and I'll make sure that Bill gets them. But the first question is, do community schools qualify for any of these programs? If so, do they go to the OFCC website to obtain an application? And you are muted. Oh, there you are.
Yeah, I'm not an expert on community schools, and so I would say that question is one that I would pass on to someone else. I believe the answer is no, based on what I know, but I would say probably Jeff Westoven is the person to ask, and we could get you an answer to that.
And Cindy, we can follow up with you as well about some options for community schools. Second question that we have is, so the difference between a lapsed and a deferred district is simply whether the district goes on the ballot in the first place. Is that correct?
No, not really. I mean, a deferred district, well, I guess, yeah, depending on how you look at it. But I think the definition of a lapsed district is really clear. They've been offered funding. They've gone through the whole process. They offered funding. We took them to the commission and the controlling board, but they just were not able to raise their funds. And within that 13-month window. Okay. And if that happens, then they become lapsed. A deferred district is not a district that got a formal offer. They were simply a district that were outreached, and we said, hey, are you interested in going through the planning process? Because we think we might be able to fund you in the next couple of years. So the distinction is one got a formal offer, the other one has just been outreached to see if they're interested in going through the planning process. If a district says they're not interested right now in going through the planning process, then they become deferred. Okay. So that is the difference. Hopefully that clears it up.
All right, and I believe those are the questions we have. So if anyone thinks of anything else, please feel free, just drop them in the chat. We'll make sure that Bill gets them. And if we don't get to them in this webinar, we'll reach out to you one-on-one. But with that, we are going to move into our next section. Thank you, Bill, again for presenting. So with this, we are going to move into the OFCC accounting and compliance section. I'll introduce our speakers as we move in. Richard Cunningham with the Auditor of State's Office is a quality assurance and technical specialist with the Center for Audit Excellence of Auditor of State Keith Favors. Rich has been with the center since July 2015, but has been with the Auditor of State's Office for over 28 years. Rich also worked for a CPA firm for over 8 years before joining the Auditor of State's Office. Rich has a bachelor's degree in accounting from the University of Akron and is a member of AGA Central Ohio chapter, where he serves as the co-chair of the Education Committee and is chapter president for fiscal year 24 and is a member of the Ohio Government Finance Officers Association. Deb is the K-12 Accounting and Compliance Administrator with the Ohio Facilities Construction Commission. She graduated from Wilberforce University in May 2003 with a bachelor's degree in organizational management and an associate's in accounting degree from Southern State Community College. Deb has held a treasurer's license since 2003 and has spent 25 years working in educational accounting. So with that, we are going to go ahead and get it started, and I will pass it off to Deb.
Thank you. Good morning. Thank you for attending this training. If you are at the beginning of a project, end of a project, or anticipating going into a project, we hope this presentation will help you better understand the process of an OFCC project. We will go over the Auditor of State Compliance Supplement and help prepare you for the high-risk areas of potential material non-compliance during an audit.
Hello, everyone. Glad to be here today. First of all, I want to thank everybody at OFCC for allowing Ohio Auditor State Keith Favors' office to assist and participate with this training. I also want to thank Deb for all of her hard work putting this portion together. We had many meetings over the past few months on working on these slides and working on the presentation. So we hope the information is going to be very helpful to you. And if you're not in the middle of a current project, it's being recorded. So hopefully when you start a project later, go back and watch the recording. You might find some helpful hints that'll help you out. So most of what we're going to go over, Deb will go through the accounting aspect and what OFCC expects you to do from an accounting standpoint. And then I'll mainly cover what the auditors are going to do. When your friendly auditors walk through the door, what compliance testing are they going to do? How are they going to substantively test the financial statements to make sure that all the items that Deb told you how to record, that they're being done properly. So I wanted to take a couple minutes real quick here before we get into the detail to show you some information on the Auditor of State's website. Okay. If you go to www.ohioauditor.gov, you're going to see our homepage. It's going to look like this. The link that's on your slides, if you click on that link later, that'll take you directly to the compliance information. I'm sure most of you are familiar, if not all of you, at least a little bit familiar with our website. If you have time later, there's tons of useful information along the top here. I recommend you take a look at some of the information. It's going to be helpful. But I mainly want to look at some of the compliance stuff, go down under resources and publications. There's a section for the Ohio Compliance Supplement Manual. There's multiple ways to get to this. And you'll see there's a 2023 version here. There's a 2022 version. They go all the way back in a number of years. So if you're ever looking for something compliance-wise from a prior year, they're available here. You'll notice, especially last year, we have an implementation guide. There's various chapters. There's a chapter 1, 2, 3, and some optional information. Starting in 2023, we reorganized and changed it. There's a new chapter 4. Chapter 4 specifically for school districts. Everything that's in chapter 4 will relate specifically to school districts. But there's still items in 1, 2, and 3 that also relate to school districts. We update these obviously annually, And we're actually in the process of updating for 2024. We try to get it out before the end of the year. Right now, it's in our legal and supervisors review stages, and we're hoping by Thanksgiving the 2024 version will come out, and we'll have a new implementation guide. We'll have a new Chapter 1, Chapter 2, Chapter 3. Chapter 4 won't get updated until next spring, probably April, May timeframe. What we found out in the past, most of the other entities are on 12/31 year end. So we update this every year. The legislature passes new laws, makes changes in laws. We go through and revise anything that may have changed from one year to the next. So we get that out before the end of the year, but we found out that the legislature is still making a lot of changes to laws that apply to school districts. And with the schools being on June 30th year ends, a lot of that information is outdated. So starting this past year, we've gone in, we've created this Chapter 4, and it'll be updated next spring. It'll have a lot of that information. A useful link that I always like to tell everybody to use is this legal matrix. If you got the legal matrix, it shows every step throughout the whole compliance supplement. Across the top, there's a listing alphabetically by entity type. You can go all the way over to traditional schools. This includes pretty much everything but community schools, JVSs, city, local schools, exempted village schools, everything's going to be in here. There's check marks by the various requirements. So you can see Chapter 1, a lot of it's budgetary type related. Anything that has a check mark by is going to possibly be applicable to a school district. And see Section 1.9 doesn't have a check mark. It's County Children's Services Fund. So this is county related. It's not going to apply to you. It applies to counties. There's various footnotes along here. You do want to watch those footnotes very carefully. As you go down here, you start seeing the Chapter 4 sections. And
Rich,
there's
this is
really,
Jen.
yes.
We are unable to see the matrix. You may have to try reopening it.
Oh, okay. Maybe I need to unshare the one and reshare just that.
There we go. Now we've got
Is
it.
it? Okay. So when we get down to Chapter 4, Section 4A-2 was previously 1-11. So if you go back to the prior supplement in 2022, all this information would have been in 1-11, but it's now in 4A-2. This is going to cover a lot of the classroom facilities information. So if we go back to where those compliance supplements were at, especially if you get into Chapter 4, and we go down to Section 4A-2, and you'll see as we start going through slides here, and a lot of the information Deb's going to go over, and then I'm going to go over, it's a lot of the information is summarized here, and we work with OFCC every year, and we have them review this and update it. You'll see things that have a squiggly underline or new from the prior year, strike throughs or old stuff. So you can normally see from year to year anything that's changed, anything new that's been added. The beginning part's kind of all of the various requirements. And as you get down towards the end of that section, there's a part called suggested audit procedures. And a lot of this is what I'm going to go over, and you'll see the various steps that will tell the auditors what they need to do. I also want to remind everybody, it doesn't matter if you have state auditors or you have private auditors, if you have IPA firms that come in and do your audit. The IPA firms are required to test any of the applicable sections in Ohio Compliance Supplement, just like the state auditors. So no matter who your auditors are, they're going to have to test some of this information. And as I said, with that legal matrix, it kind of helps you to show the stuff. And as I said, I've told other people with training presentations. It's all public information, public records. You can go out ahead of time before your auditors come in. You're going to know exactly, at least compliance-wise, all the compliance the auditors are going to ask about and check about. You can review through, see what the requirements are, what the suggested audit steps are, and know before the auditors ever come through the door exactly what they're going to test and what they're going to do. So I'll close that out. I'll unshare and go back to Deb and let her show you a little bit of information on the OFCC website.
Okay, I'm going to be doing the same thing. I want to guide you briefly through a new website. We have a new website. We worked hard to make it easy for treasurers to navigate with one click. So let me share here. Okay, it's ofcc.ohio.gov is the website. If you go clear to the bottom, we'll see it says Treasurer Resources. What I've done here is you'll see that there's different tabs. And I think you're going to probably find all the information that you need under these tabs, but I thought briefly we could go through them. The Auditor of State Compliance Tips, just like Rich had said earlier, he kind of walked you through the Auditor of State, but what I wanted to do is also have it on our site and just have our section, OFCC. You'll also see Auditor of State, state levy facts, answers, and some bulletins. Next site here is the drawdown. And this tab will show you the quarterly draw schedule, reconciliation form, and also provide you with the training video. It would be beneficial if you could review all of these tabs. And one thing you're probably thinking is, what is a drawdown? Well, the drawdown is very important and determines the funds that you will receive from the state on a quarterly basis. You will fill out the reconciliation form for the quarter. Don't worry, you will receive training and help on filling out this form from our OFCC project managers and or your project construction manager. Then OFCC Finance will calculate the amount of state funds needed by your project for the next 60 days. We rely on the spending schedule that is approved at the beginning of the project and your cash flow needs. Payments by ACH are anticipated to be made the second Friday of each quarter. You will be asked at the beginning of the project for banking account information for your ACH payments. Then the next part here is your equity list. And Bill was correct. This will be a hot tab. This will hold the most current list, which is approved in the fall of every year. It shows the list by rank in the alphabetical order. There is a lot that goes into it. I listened to it. Escrow retainage. There's a sample escrow release, partial escrow release, sample retainage agreement, just things that can help you. But I also wanted to explain what it is. A school district is required to establish an escrow account in accordance with ORC 153.13. Retainage is money that is held back until the project is completed. This money will be withheld from your contractor and ensures the job is completed to the school district's satisfaction. The escrow account doesn't need to be set up until the contractor has met 50% of completion. Generally, this will come from the contractor when the time is to put the money aside. I was involved in 2 building projects. Well, actually, it was 2 buildings with my project. I set up 2 separate savings accounts through my local bank, and it seemed like to me to make it easier to release the funds. Don't forget to keep interest in this account. They are entitled to any interest that might be earned with the funds that's sitting there. When it's time to release the funds, you will go to the bank, give them the information to release the funds, which usually includes name and address of the contractor. You will then let the bank release the check and mail it, or I personally had them give the check to me and I presented it to the contractor. I just felt like that was a better way to handle it. Okay, so that's a little bit about escrow and retainage. The financial resources tab, this has so much information on it. The chart of accounts, this is recommended chart of accounts for a building project. And we will talk about it just a little bit later on. But I think that's something that you might want to view if you're beginning a project here soon. There's also information on financial tracking and reporting, finance policies and use of your interest earnings, and eligible and non-eligible uses of the project funds. So I think that's a really important tab there for you to look at, just to make sure that you're staying under the guidelines on what your expenses are. Are they allowable or unallowable? And the last tab here that I wanted to show was just the treasurer's newsletter. So we're going to have this out, and we're going to do this quarterly. And just on that, it will provide you with important information regarding upcoming events, changes in processes, general information pertaining to building projects for K-12 treasurers. And I do hope this website will help help you find everything in just one click. And I do, if there's ever suggestions on something you might want to see out here at the treasure resource part, please let me know, because we're open for suggestions. Stop sharing here. Okay, back to the presentation.
All right, Deb, and I'll skip this slide since it looks like we just went through it. So
Yes, we did. Yes, we
perfect.
did.
Thank you very much.
Okay, now this part here is probably the most important part. If you're just starting a building project, a creation of funds, one of the first things that you need to do is create your funds. I'm going to go through the different funds that you'll need to set up. The project construction fund defines the responsibility of the school district to establish a fund 010. You need to set up 4 funds for this project, which requires a different special cost center for each one. You will need a state fund, local fund, state interest fund, and local interest fund.
So when the auditors come in, like with anything that the auditors are going to do, they're going to make sure that you're accounting for everything properly. So you're required to set up these funds and run the activity through it. And as they're testing part of their financial statements, they're basically going to determine and make sure that you created all 4 of these special cost centers under the 010, if you were required to set them up for your particular project. And we'll spot test and spot check activity to make sure that the funds were not only created, but any receipts and expenditures that are going in and out of those funds and special cost centers are being accounted for properly in the proper fund.
Okay, the next, your next fund you may need to set up is Local Funded Initiative, LFI fund. Not all schools will have this fund. And what is an LFI? A school district board may elect to add to the scope of a project and separately fund a scope of work. It's called a local initiative. This will need to be board approved, and the school district will assume all financial responsibility. OFCC will require certification of funding source, execute a budget summary, and will need to see the financial deposit into the accounting system. You will need to set up and establish an LFI fund. Fund 004 is most commonly used, but you could use 003 or 070 to certify your funds. The certification of funding source will show what funds you decided to use, and do not commingle with Fund 10.
Yes. And again, the auditors, like everything else, are going to make sure that you establish this fund properly. As Deb mentioned, not every project will have an LFI, but if you do have an LFI, they're going to make sure that you establish the appropriate fund. 004 is probably the most common that we see. And again, that it's set up properly for the purposes of that LFI project. And as Deb mentioned, you need to make sure that you're not commingling the monies with the 010. So the big thing is we're going to be checking and making sure that any activity it's supposed to go through 010 is going through that. Any activity it's supposed to go through 004 or whatever fund you use for your LFI, that you're tracking those receipts and expenditures through those funds properly.
And the last major fund that you have to set up is your 034 maintenance. All of these funds, I would refer you to look at the chart of accounts on suggested account codes. A school district board will provide the funding of the maintenance fund, required approval of the maintenance plan, and allowable expenditures out of this fund. We will talk about the different options to secure the funding necessary here just a little bit later.
Deb, we do have
Okay.
one clarifying question really quickly. Just someone wants to know, when setting up the O&O funds, 4 accounts need to have different special cost centers, correct?
They do, yes. Yeah. It also, it helps you along the way, but it also helps at the end during closeout to have them separated.
The 034 fund, just like the other funds, again, the auditors are going to check and make sure that you've established this. Unlike the LFI, everybody's going to have some type of 034. You need to make sure that it's in accordance with whatever your project agreement is, that you're funding it properly for the 23 years. So as a project starting, from the auditor standpoint, I mean, the first few years and while you're building and the construction's going on, the auditor is going to be testing a lot of that activity once a construction project's going on. Once that's done and closed out, your 034 fund's still going to exist for at least a minimum of 23 years. So potentially the auditors are going to only be testing at 034 because everything else is done and closed out and gone away with. So they're going to ensure that you're putting monies into it for 23 years. It is classified as a special revenue fund. Unlike all your other funds are going to be capital projects fund, and this is a special revenue fund. And as Deb mentioned, you cannot transfer money out. We've had some districts that once they get through the end of the 23 years, they've got money left over. Oh, I'm just going to transfer it for other purposes. The purpose of the fund hasn't ended yet, and you can't transfer or close out a fund until the purpose of that is ended. So you don't have to keep adding money to it after 23 years, but if there's leftover money, you still have to spend it for the purposes that that fund was set up for the maintenance and upkeep of your new buildings. Only if there would be a rare instance if for some reason you sold the building got destroyed, you had a fire, you had a tornado, you had something else. If the building no longer exists and therefore the purpose no longer exists, then you potentially may be able to use the money for other purposes. But as long as that building exists, it's still part of your school district and you're responsible for maintaining it and upkeeping it. You're still going to be spending money out of that fund until you eventually spend that fund down to zero, and then it would go away. So I'll let Deb take over then on the next slide.
The next part we're going to talk about is revenue that's going into your O&O fund. So what do you anticipate coming into the O&O? The O&O state fund, you will see your quarterly drawdowns from the state come through the O&O by ACH. And again, I would refer to your chart of accounts. I know I'll keep saying this probably over and over, but really look at those for suggested revenue accounts to set up. Now, your O&O local funds, according to your project agreement, you will have a local amount that will need to be secured into this fund at the beginning of the project.
Okay, so now you've established the funds. Now we're going to be starting to look at the activity. So we're looking at all the revenue side, and from an audit standpoint, again, we're going to make sure that you're putting that proper revenue into the proper funds, and that if you have a local share amount and you have a state share amount, that as you're receiving those revenues and those drawdowns, that revenue is being put into the correct fund and special cost center.
Next slide. The next revenue that we're going to talk about is the O&O state and local interest revenue. So the school district is required to separately account for interest earned on the state and local of the required contributions within a project construction fund. On a monthly basis, you will need to record interest earned for both state and local when recording the interest. And if you are using an investment manager, make sure you record interest less fees. So I guess it would be considered the net. Investment fees are an unallowable expense. I would also advise you to look over your investment policy to make sure that you have what is needed. The OFCC project will be a large amount of money. And I just wanted to also briefly talk about what happens at the end of a project with the interest earnings. Your local interest at the discretion of the state of the school district board, the remaining local interest can be retained in the project construction fund for future projects, the O&O, transferred to the school district's maintenance fund, Fund 034 and used solely for maintaining the classroom facilities included in this project. Or since the project will be officially closed, you could transfer to the school district's permanent improvement fund. As always, I would advise you to reach out to your bond or legal counsel for a recommendation on what you would want to do. State interest. At the end of the project, if you have some left, any interest earnings left for the state at closeout are required to come back to OFCC. During the closeout process, you will be advised on where the money will need to be returned. And I'm just going to briefly talk about House Bill 119. You'll see that out on the Treasure Resource page, and there's actually a bulletin, but it allows the school district to use any or all of the local interest earnings during the project, but you really have to be cautious because if your project exceeds the amount of the project agreement budget and a project budget amendment is needed, the school district is required to restore that money back into the Fund 010. So basically, if you are over budget, the funds that were moved according to House Bill 119 will need to be moved back into the Fund 010. I would just review if you're interested in it or planning on using it, just review the bulletin just to make sure you understand it, and maybe reach out to your bond counsel or legal.
Yeah, the interest part may get very confusing. So yeah, check with your bond counsel, check with OFCC. Like everything else, the auditor is going to review the financial statements and see if you're earning interest. And as what Deb went over, make sure that that interest is being accounted for in the proper funds, proper special cost centers. If you are transferring or moving any money, we're going to make sure that you got board approval to move that money, that it's in accordance with OFCC project agreement and you received the approval from them on restoring or allocating any of that money. Also, as far as if the fund needs to be restored, if there was money moved out, as Deb mentioned on the House Bill 119, we're going to ensure that all that is being done properly. And then at the very end, when you're closing out the project, there's various places where that remaining interest need to be transferred or allocated to. The auditors are going to test all of that at the very end and just check and make sure accordance with what the law said, whatever the revised code said, and guidance that you received from OFCC that those monies were used appropriately.
Okay, now let's talk about the O&O expenses, the expense side of it. The Project Construction Fund defines the responsibility of the school district to establish the funds. We talked about that earlier, but it also is what are the uses of the funds. So transactions from the fund are restricted to payments for professional design, owner agent or other administration services. Number 2 is payments to contractors who have performed work on the project. And then also purchases related to the project and any transactions authorized necessary. All expenditures out of the fund require commission approval prior to payment. There are allowable and unallowable expenses, and I think I showed you where that was out on the Treasure Resource page. I personally would review that and just make sure you're staying in compliance. When expenses are paid out, and I think Bill talked about the split for schools, state versus local. When expenses are paid out of local and state, it for instance, is if 75% state, 25% local, you will use that split to pay each invoice. If you, at all times, if you are ever unsure of an allowable expense, please reach out to OFCC for approval. It's better to be safe than get in trouble for it.
Yeah, definitely seek any advice if you're unsure, because again, the auditors, what they're going to be testing is that it's allowable and it's okay. So we've tested the revenue coming in. Now we're going to sample test disbursements just like we would any other disbursements throughout any other funds. And we'll make sure that they were proper, they were in accordance with your agreement. They're going to make sure that nothing that was dispersed should have been charged to your local funded initiative if you have an LFI. So again, they want to make sure that they're in accordance with your 010 fund. They'll be testing invoices, canceled checks or images of canceled checks. You're going to do the normal disbursement process and make sure everything is handled properly. They also will probably be doing some bidding compliance testing because we're talking about large amounts of money for construction. So Generally, when you start spending this money, it's going to be projects that need to be competitively bid. I'm assuming you'll probably be working through bond counsel and so forth to help you with any kind of the bidding process. So the auditors may also test some of the ORC requirements, make sure that you accepted the lowest and best bid and so forth, or whatever the bidding requirements would be, along with actually testing the disbursements and making sure that what you're paying out is the appropriate amount to pay out.
Okay, let's go over to the LFI, the 004 fund you had to set up, or 003 or 070, whichever one. Let's talk about both of them, expenses and revenue. Revenue is as part of LFI, you will need to secure the funds for LFI that will state the exact amount and will be board approved. Do not put the LFI into the 010 construction fund. They are kept separately. And again, refer to your chart of accounts. And one thing about the LFI, you also have to interest for this fund. I would advise you to put it in a different special cost center, but I'm not sure it's as critical as the 010. The expenses, again, kind of comes down to allowable expenses out of, and it will come through the project as noted earlier.
And again, the auditors are going to vouch a selected sample. They'll pick a sample disbursement from this fund. If your particular project doesn't have an LFI, then there's not going to be anything for the auditors to test. But if they see that you have a local funded initiative, you have a separate fund, just like the previous slide testing the 010, you want to make sure 004 expenses aren't going through the 010. We're going to also make sure 010 expenses aren't going through 004, that you are tracking and keeping track of that money separately. Same type of procedures, looking at invoices. If there's things that need to be bid, we'll test the bidding requirements, and we're going to make sure you receive proper approval. So again, if you're unsure about expenses, you need to get approval ahead of time from OFCC. Make sure you're doing that. Make sure you're maintaining the documentation and the paperwork to support and justify that it's being charged to the correct funds. Generally, if the auditor is going to see that it's in accordance with the agreement, that you received approval ahead of time, they'll normally accept that it's being recorded to the correct fund.
The next slide will be, we talked earlier about the 034 and how you secure your revenue. There's two ways. We'll talk about traditional way. And the school district treasurer is required to identify the source of funds to be used to fund the maintenance fund. The following sources are sources that you can use. Levy an additional tax for the maintenance of a project of at least 1/2 mil. Earmark from the proceeds of an existing permanent improvement tax levy under Ohio Revised Code 5705.21, an amount equivalent to the amount required in accordance with the maintenance fund described above. Funding can also be satisfied by applying the proceeds of a property tax or the proceeds of an income tax or a combination thereof. Also, the school board may extend a previously approved tax by 1/2 mil for each dollar evaluation. And lastly, locally donated contributions as an offset of all or part of the district's obligation to provide for the maintenance fund as described above. Those are what normally the traditional way to secure the funds. But then there also is an alternative method to securing the funds, the revenue. By board resolution, you could secure an alternative method on annually depositing the funds into the 034. The district may deposit into its maintenance fund annually for 23 years an amount from other district resources equal to 1/2 mil of the district's tax value. And this is instead of levying the maintenance tax. The district board must pass a resolution petitioning the OFCC to approve the arrangement. For example, the district I worked at committed our continuous permanent improvement levy. So that we committed the funds to come out of that annually. So we didn't go by levy. This next part, if you have a levy, there's no need for you to do this step. But if you're doing the alternative, like what I was talking about, transferring the money from the PI annually, this is considered an alternative method. You will need to send an annual certification that the money has been put into the 034 fund. This certification needs to be emailed to the Auditor of State and us, OFCC, annually. I don't, could you go to the next slide? Yeah, there's the email there, ofcc@ohioauditor.gov, and a maintenance certification at ofcc.ohio.gov. Those are, you have to do that annually. So whenever you do your movement of your money or secure the funds in there for the 23 years, this is something you have to send to us once a year.
Okay. Again, the auditors are going to test to make sure what kind of method that you're using. The slide prior to this offered various methods. So we're going to check to make sure what method you're using. We're going to make sure the correct amount's going in. So that's going to be decided in your project agreement and through OFCC of which dollar amount. So they'll verify each year that that dollar amount's going in. Again, once the project's done and over with for the 23 years, you'll be putting that in. So the alternative method on the slide, so we said there's not a lot of districts that use it, but this is an alternative method of doing it. Most of this information is all in the compliance supplement section that I referred you to. And as I mentioned, if you elect to do this, you have to email both OFCC, and you're also going to be emailing the Ohio Auditor's Office to verify that that's being done. And that guidance in the current compliance supplement. Something that we're working on, hopefully maybe we'll update by next spring, is give a little bit clearer guidance, because it's pretty wide open on how you do that certification, and everybody submits it differently as far as just submitting an email, doing a form. We want to see if we could create some kind of a standard form to make it standardized for everybody to do it the same way. I've also found out that there is a way within the e-services portal, if you go into the Auditor State e-services where you can do a lot of information, there's a way to upload stuff there. So we're going to talk and discuss with the Auditor State's office and see if we're going to require you to always do it in e-services, if we're going to require another method, or some will keep it open-ended. So for right now, it's pretty much open-ended. You just need to submit something. There's an example at the bottom of the compliance supplement that has some sample language. The undersigned treasurer of the Board of Education of such and such school district, such and such county, hereby certifies that a resolution was duly passed by the Board of Education of said school district on such and such date to transfer X amount of dollars from the general fund to the OFCC Facility Maintenance Special Revenue Fund. So again, that's just sample language. It's not required language. You just need to do something. So again, as far as the requirements, the auditors are going to come in, make sure that you did move the money over there properly, that you got board approval. If the incorrect amount was transferred or it's not corrected, the auditors have to notify the board, and the board has 90 days to make that correction. If it's not corrected, the auditors have a requirement to notify the Department of Education, and potentially if it still doesn't get corrected, Department of Education can withhold part of your future state funding until that all does get corrected and gets updated. So you need to make sure that that's all handled okay. And I'll let Deb talk just a little bit about the equalization payment part at the bottom part of the slide.
Yeah, some school districts will receive an annual equalization payment from Ohio Department of Education. This annual amount is not allowed to be used towards meeting your annual contributions. I wanted to make sure that you knew that part, because honestly, I've had that question a couple times, can I just use that towards meeting it? No, you cannot. I think Rich mentioned this earlier, but I wanted to reiterate, after the 23 years that you put the funds in there, you can't just transfer the money out unless, like what he said earlier, the building is no longer exists. Then, maybe you can move the money at that point, and I would get legal advice on it. Okay. Next one. Let's talk briefly about the 034 expenses. The allowable expenses, allowable versus unallowable. Expenses are determined out of this fund by your maintenance agreement that's completed at the end of your project. Please review the agreement. Unallowable expenses, I know for sure, will include routine janitorial and utility costs, equipment supplies, maintenance staff salaries, and personnel associated with the day-to-day housekeeping and site upkeep per normal and customary standards. Again, like I said earlier, contact OFCC if you're unsure about the expenses.
Yes, and again, just like the other funds, the auditors are going to vouch some of the disbursements from this fund, and like any of the other funds, are going to make sure that's allowable and proper. And generally, if we find anything that's unallowable, we may make an audit adjustment and require you to move it. So if you're unsure, check with OFCC, make sure that it's allowable, make sure it's in your project agreement as to what it can be spent for, what it can't be spent for, because there are some restrictions of what you can spend the O34 money from, what's considered maintenance of the new buildings and what isn't. You need to make sure you're not using this for maintenance of other old existing buildings. You have to identify it as being used for the buildings with this specific project. So plan accordingly. You're going to know upfront how much money per year needs to go into this. If it's $50,000 a year, I mean, try to plan and budget to spend roughly about $50,000 per year. It's never going to be exact, but try to keep spending it as you're going, because as we mentioned, you get to the end of the 23 years, you don't want to have a huge balance of money in there because you haven't been planning to spend it, because you can't transfer it out for other purposes. You're going to have to transfer it in the future. So ideally, as you're doing your budgets and figuring things out from year to year to year, however much you're putting in, try to plan on spending close to that. So hopefully once you get to the end of the 23 years, you're not going to have a lot of money left, and you're going to spend it out, be able to close out that fund fairly soon.
That's good. I always kind of had a 5-year projection of what needed to be done in the buildings, 10 year, 15, 20 years. So I didn't spend it as I received it, but I tried to build it up and know that if the roof needed to be replaced, I had the funds in there available. The next piece is the completion of the project. You will work at the end of the project for what they call a closeout with somebody in finance. We will ask you to provide us with financial reports from your accounting system. We will compare those reports with what has been entered into OFCC. With the information provided from the school district, we will begin to work on, it's called a closeout calculator, that the treasurer, construction manager, and a finance representative will sign. You will be notified what funds you will keep and what funds will be sent back to the state at this point. The next once the calculator has been signed by everyone, then we will work on what is called a certificate of completion. This will be filled out and given to the treasurer along with a resolution to take to the Board of Education for approval. And so once that's approved, then the next step would be, if you owe money back to the state, we will communicate that with you along with a W-9 where to send the money. And then the last thing that will happen when all the money has been received back to the state, if you owe, you will receive an email to that effect. Keep that email for your records along with the signed closeout calculator and certificate of completion because I believe auditors will want to look at that. And if there are remaining funds left, OFCC will give you instructions on what you can do with the funds available.
So you're finally near the end of the project, closing things out. As you can see, there are a lot of things to do at the very end. Make sure that everything's being handled properly. Hopefully, luckily, your auditors are going to be testing it once. Hopefully, the closeout will happen during one particular fiscal year, so the auditors aren't going to need to test this in multiple years. But there are a lot of components and parts and stuff to this, and the auditors are going to just check and verify with whatever OFCC said, how you're supposed to close that out, which money went where. We're just going to kind of re-verify and double check and make sure that you followed all those procedures properly, that you return monies back to the proper places, or if they needed to go to other funds, and that you closed out all those funds. So this is very important at the very end, that you are consulting, working with OFCC, that you're following all that guidance very closely. And again, we can't stress enough, ask questions. If you're not sure, ask for help of how these procedures need to be done.
The next slide is final thoughts. I know we've covered a lot in a short period of time, but since I've been through a building project, I wanted to give you some pointers. And I went through actually 2 different building projects as a treasurer. Make sure you attend all core meetings. The meetings will usually happen once every 3 weeks, I think. It is your responsibility to maintain the budget, listen and be present. There could be important decisions made without your knowledge at the core meeting, which could affect the budget. Bottom line is, you want to produce a wonderful building, but also maintain the budget. And also, always follow the recommended chart of accounts when setting up accounts in your accounting system. I think it makes it easier at the end for closeout and also for auditors. Try to stay on top of things. Don't get behind. It's really hard to get caught back up. So I know that firsthand. Always keep the Board of Education informed on the progress and any changes. To me, that's key. Make sure you reach out to your legal representation on anything you feel important. I know it may cost you, but it will be worth it for the advice. And as a treasurer, I know a new building project will be challenging just to have the time in your normal day to stay on top of. But I can tell you personally that when the project is completed, it is a very rewarding feeling. And then, as always, OFCC staff will be available for any questions you have at any time during this process.
Yes, and I just reiterate pretty much everything that Deb said. I mean, we covered a lot of information in a short period of time. I'm sure this is probably overwhelming. But so go back, review the training later when you get to the middle of the project, communicate, talk to people. The auditor state's working on a new bulletin that should be out very soon. That's going to provide a little bit more additional guidance on some of these projects. So look for that coming out soon. It'll address movement of some of the monies between funds, when you can or can't move monies between funds, or some other items that we're going to cover within that bulletin. As we said, the communication, can't stress that enough. You need to communicate with all the parties. You're talking about tens of millions of dollars with these projects. You have huge amounts of money. So at least from an audit standpoint, if there's errors or mistakes, they're normally going to be material errors and mistakes that you're going to have to do adjustments. You're potentially going to get non-compliance citations in your audit report. Consult with all the parties and double check with all the parties. Your bond counsel is going to know all the legal stuff. They're going to give you good advice from a legal aspect, what you can legally do. OFCC is going to be able to tell you from the accounting standpoint what you can do accounting wise. Sometimes legal and accounting doesn't always match up. So make sure you're confirming with both parties. If you're talking to one, talk to the other. Make sure everybody's on the same page. If they're not, work that out and coordinate it and make sure that you don't have any problems, so you don't have confusion when the auditors come in. If you need to ask questions of the auditors, feel free to reach out to your regional auditors if they're from the auditor state's office or regional office. If you do have IPA auditors, call and contact them. But generally, the auditors aren't familiar with these projects. They don't know all the detail. So generally, your first step is to talk with OFCC. Go use OFCC. Use bond counsel, make sure everybody's in agreement, get things in writing whenever possible too. If you have a gray area or something that you're not sure of, ask or try to get it in writing. If you can't, sometimes people won't always do that, but that'll help from an audit standpoint. Auditors are going to be big on making sure that you have an audit trail, you have documentation, that you have support for everything. So the more support that you have, the better. And like with any audit, normally the auditors aren't coming through until a year later. You're not going to remember every single thing that you did, and especially these big projects. Write it down, have it somewhere, have it saved. When the auditors start asking you questions, you're going to be able to pull it out, show them, hey, this is what I did, this is who authorized it, this is who approved it, and then we can start asking some more questions. Because as auditors, we want you to do things right, correctly the first time. We don't like coming in, having messy audits. We don't want to make a lot of audit adjustments. So make sure you're asking all those questions up front of things that you're unsure about. Make sure that they're all handled okay.
I wanted to reiterate the K-12 finance at ofcc.ohio.gov. That's actually the website that will come into us in finance. And, if you have any questions along the way, setting up accounts, any questions about expenditures and allowable, that's where that's a majority of us can look at that, not just one person. So that would help. But sounds good. And thanks again for attending. And hopefully with the new website and this presentation, you got some great things that come out of it. Have a great day.